Sanjay Shah also joins us now. Sanjay, good morning. Thank you for joining us. Sanjay, in your understanding, what would be the immediate implications for debt schemes starting 1st of April 2023?
So I think definitely it's a shocker because nobody who expected the sudden change which came. But still, I think I'll reiterate that the debt funds of the mutual fund itself has their own advantage, like providing the significant liquidity. I think the basket of the instrument which you buy underlying schemes. So probably I agree as far as the tax arbitrage which was available has gone away. But if you look at the large asset which is there in the with the industry is in the bucket of 1 to 1.5 years, which are probably you can talk about the liquid, ultra short-term and short-term category. They were never coming to mutual fund for the tax arbitrage. So all the corporate money which used to be managed by the fund houses will continue to remain there. But yes, I think it's going to be from the point of HNIs and Ultra HNIs, it might be they need to look for some alternative.
Sanjay, in your understanding, how much of the schemes, mutual fund schemes currently are getting inflows from institutional clients and HNI clients, and how much is coming from retail, pure retail?
So if you look at pure retail has not been, I'll just give you a prudent example. Today in my assets of, let's say we represent entire IFA community or the retail community, in my 57,000 crore of AUM, 92% is equity. So probably the retail has not came to date. It is always the institutional money, and institutional money where probably if you look at there is you can distribute into two buckets. One is short-term parking where they are optimizing their investments. So still I think the mutual fund is continue to remain a very good alternative. Now if the money is coming for a longer term, like if you look at the target maturity series, FMPs or the passive funds, there probably the people will start looking for the alternative. But still, if you now probably you can look at everything comes at par, right? You don't have any tax advantage. Now, if you don't have any tax advantage, still absolute return also possibility of the debt fund is very, very likely that they'll be able to generate better return.
So what happens in this case? I mean, is it a clear advantage, FDs for that matter, equity saving funds, hybrid schemes? And then I want to talk about gold as well. But first, where do you think the money is going to flow into? Bala?
Yeah. I think of course, let us assuming this what has been done, it comes. I think it's going to get implemented. Naturally, of course, the alternatives will become the hybrid funds, arbitrage funds, and increasingly people would like to take more risk in the equity itself. In that sense, of course, the prominence of other asset classes will increase. Just to also add to the point what Sanjay mentioned about while corporates have been the large investors, especially at a time where when equity market turns extremely volatile, even from retail and HNIs investors' point of view, we have been, of course, dreaming that their own participation in the bond market had to go up quite significantly as part of their portfolio balancing. And that's something would remain one of the most sought after asset class from investors' point of view. But having said that, naturally, it will give an edge for funds like hybrid funds, which has got a mix of both equity and fixed income, would actually gain more prominence. But I think one has to still keep in mind whatever the mark-to-market, the fluctuation would be there, which otherwise is there in the fixed income schemes as well. That is something one cannot assume that it will go away. At the same time, industry, of course, have to, of course, think about new way of building this business. Though at this point of time, when I compare that India versus US, and US bond market is as big as an equity market and catering to the growing needs of investors. Even recently, when, as all of us clearly remember, the recent crisis in the financial market in US, one of the beneficiary in the US has been the money market funds who have been the large beneficiaries because they are the one have been giving the interest rates which are prevailing at this point of time to the investors compared to even the banks who have been giving the lower deposit rates to the investors. And that's the kind of role which is mutual fund have been playing, that true reflection of the market prevailing yield, which 100% actually goes to investors. And these are the importance, in my own belief, is cannot be taken away and kill one of the asset class which can play a very big role from investors' point of view, as well as from the bond market development point of view.
Sanjay, closing comments. Do you think suddenly?
No, I think the
yeah, go ahead.
Yeah, it's a sudden change, and everybody has to absorb as far as mutual fund AMCs are concerned, distributors are concerned. But one thing I can see that the less than 5 lakh rupees ticket size in the insurance is now becoming again very, very attractive. Because the exemption, only product where you get the tax exemption is the insurance. So again, I think advantage is going in favor of insurance. Even in case of above 5 lakh ticket size, also now the mutual fund was enjoying the tax at arbitrage, so that has been now going away. So now mutual fund, otherwise, but if you look at mutual fund has its own strong advantage as far as management, liquidity, and the credit management is concerned. So virtually, after some hiccup, I think virtually will come back for sure.
Sanjay, Bala, both of you, thank you so much for taking the time off from your busy schedules and giving us all the perspective